Okay, so Ryan, a longtime subscriber, was wondering about your thoughts on Hibbett.
Right. So, for those who don't know, Hibbett is a retailer in the United States. They focus on footwear, and their main supplier is Nike. We bought the name in 2018, end of 2018, at $15.01. And as Ryan likely knows, we're out of the position now. So we've exited it entirely. And we did that at $43.50, at $48 and change, and then at $55.50. And those sales occurred in late 2020 and early 2021. So the holding of that company was pretty good. I mean, that was quite a good return over the period that we held it. But like so many companies in today's market, it's continued to rally, and it's actually hit a high of over $75 in the last 2 months. It's come back a bit now, but it's been one of those companies that has just rocketed upwards. And I suppose you could say, in retrospect, we left a little bit too much money on the table for other investors, but hindsight's 2020. So I guess we'll move on and see if we can improve next time.
No kidding, that is a huge rally indeed. So is that rally unique within the sports and athletic wear category?
Um, the rally that Hibbett has had isn't that unique. It's more or less in line with the big publicly traded peers. If you look at Nike, Dick's Sporting Goods, Big Five Sporting Goods, or Shoe Carnival, they've all seen similar rises. And one of the reasons for that is the big companies that have the big logistics and supply chains have been able to survive. And many of the small mom and pop shops or even mid-sized retailers throughout the United States have gone bust or closed up or don't have the online distribution mechanisms in place to make it work in a COVID pandemic environment. So these companies that have been able to weather the storm, have been able to sell online, have done well, and the competition hasn't. So I would say Hibbett is quite standard of what you're seeing from the big kind of retailers in the US.
Yeah, it'll certainly be an interesting one to watch.